Ladies and gentlemen, welcome to the Business Brew. I'm your host, Bill Brewster. As per usual, this episode is brought to you by Koyfin. Koyfin displays financial information simply and elegantly. Koyfin is one of the fastest growing platforms for financial data and analytics to research stocks and understand market trends. I discovered them thanks to their very passionate users, many of which are my friends. Imagine a Bloomberg Lite with tons of high quality, fundamental data, a powerful graph engine that can show it all clearly, and a user interface that doesn't look like it was built in the 1990s. If you're an individual investor, research analyst, portfolio manager, or financial advisor, do yourself a favor and check them out. You won't regret it. Sign up for free at koyfin.com. That's KOYFIN.com. And remember, you're supporting an awesome founder. Rob's a great guy, so check it out. This episode features Stinson Dean. Stinson is in the lumber trading business. He doesn't just trade financial contracts, though. Stinson is actually the guy that you see that buys the rail cars of physical lumber. He stores the lumber, and then he sells the lumber at a profit, assuming all goes well. He does recognize losses occasionally, but we don't like to talk about those. I joke. Stinson has a background in risk management, and I personally found the conversation fascinating. Why am I interested in a physical lumber trader to talk to? Well, one reason is Stinson is a very cool individual, as you will find out. He may or may not have a lower back tattoo. Secondly, I was at BMO Harris, where we banked food and consumer companies, and I was always fascinated with how commodity-based company offset some of the price risk, whether or not they did, how they did, when they did, whether or not they use futures, whether or not they use options. The lumber market is similar in certain dynamics, though it's much less deep. And frankly, I also have a small investment in a lumber mill, so I wanted to have a conversation with somebody that knew something about lumber. As always, none of this is financial advice. All of the information contained in this program is for entertainment purposes only. Please consult your financial advisor before making investment decisions. Do your own due diligence, and please enjoy this conversation with Stinson. So with that out of the way, I am thrilled to be joined today by Stinson Dean, ex-lumber celebrity. When everything was running, you were a man that was in high demand. Now, I don't know if you're crying at a lack of demand, but you were once on Bloomberg's podcast.
Right. I've fallen pretty far now to land here.
This is exactly correct. You're now scraping the bottom of the barrel.
Yeah, it kind of coincides with the lumber chart.
That's exactly right. Do you think you're going to recover from stooping this low, or do you think that you're going to make it back someday?
Yeah, it's hard to tell from a risk-reward perspective, but no one's been calling me lately. So I got a lot of stuff to say. So I was happy that you reached out.
Good. So I caught you at the bottom of your self-esteem,
exactly,
general professional life, and
just raw truth.
That's good. That's how I like it. I can assure you that I'm not going to lift you up, and I'm at my bottom too. So we're just going to I'm drinking wine right now. I have no idea where this is going to go.
Deal.
All right.
Well, if I drink wine, you might see my higher for longer tattoo that I got.
I like it.
But,
is it on your lower back?
Yeah, we'll see.
We'll find out. So, dude, why don't you talk a little bit about where you're from? I'm really happy that we're not doing this episode when lumber was mooning and everybody was acting a damn fool, and that we can actually talk about what the life of a commodity trader is like. Or I don't even know that it's fair to call you a commodity trader, but why don't we get into that as it goes and talk a little bit about your background?
Yeah, well, I think commodity trader is the sexiest thing that you could call me. But in reality, I buy lumber and I try to sell it for a little bit more than I bought it for. And a lot of folks have learned this year that lumber is a commodity. So it's just as volatile as any other more popular commodity. But I certainly didn't know lumber trading. I remember snickering when I started out on the grain desk at a company called FC Stone.
Oh yeah,
which is they're now called Stone X. And I remember snickering when I heard the term lumber trader, because I was sitting next to nat gas traders and energy, oil, and all this real fancy derivatives, and grains was sexier than lumber. And then I started looking over at the gal, her desk next to me, who led the lumber desk, and lumber was just limit up or limit down, kind of depending on what time of day it was. And I'm like, this market is crazy. And so I just started asking questions about risk management and consulting and how the industry utilizes futures. And it's not a very sophisticated marketplace from that standpoint. So as a consultant on risk, which is what FC Stone did, was we would consult companies on managing their commodity risk. I was like, well, this might be a market that I could actually get some clients, because in grain, everyone knew more than I did already and had been doing it for decades. So I wasn't getting a lot of traction on the grain side. So I switched to the lumber industry, and it was what I thought. It was largely untapped. A lot of education, just real basic education was needed. Everything from futures mechanics to basis trading to options and potentially swaps and different OTC products. But that's how I got my start. I just happened to be sitting next to the lumber desk, and I volunteered to help them cold call and recruit for a hedge school that they were putting on. And they just
What do you mean a hedge
into
school? What is that?
It's like a seminar that folks, like consultant groups, put on, that you invite industry participants and you just take them through a 1 or 2 day seminar on how to use the futures market to manage your risk.
Okay.
And it's all commercial participants in whatever commodity market, because there's such a big learning curve with futures in and of itself, and then combining it with the cash market. It's just, there's a lot to learn and understand. So for decades, risk consultants have been putting on hedge schools, teaching farmers how to hedge their grain. And that's typically how you get clients in the door. It started with education. So, man, that's how I kind of fell into lumber. Before that, I was in medical sales. It's completely different. I got hired at FC Stone because they wanted salespeople. They wanted seasoned salespeople to sell consulting, business to business, risk management consulting. And their thought was, let's bring in sales professionals and put them through an academy to teach the book smarts. And it's a great idea. And they did one academy and they never did it again. I literally was the last one standing after
Why didn't they do it again?
Like I said, I think it's a great idea. But yeah, it just didn't take off. I don't know if it didn't have the right internal support or what, but I think I was just lucky enough to be in that initial and only class. And I was lucky to fall into lumber, because I mean, it's so hard to compete in these larger, more sophisticated commodity markets. And lumber was small, niche, uneducated, and there's kind of room for one person extra, and that was me. So that's how I got my start.
It sounds like you were closer to creating your own luck than lucky to fall into, just based on what you said about you were looking at the desk and thought, hey, this might be an inefficient market. I'm going to go attack this.
Yeah, for sure. I didn't want to say it out loud, but yeah.
That's
right.
Dope. I just had a conversation with the guy, Jay Mintzmeyer, and he's a shipping analyst. Very similar story, man. I think that one of the reasons that I'm excited to talk to you, among the fact that you're a really cool guy with a great lower back tattoo, is that there is an element of the world that is ignoring some of these lesser known niche products, right? So a lot of kids ask me, oh, what would you do to get into finance? The old school answer used to not be just cover tech and buy the greatest company out there and watch the stocks moon. The older answer used to be find a market that's somewhat inefficient, become a specialist, add value, make money. That's sort of the old school way to do it. And I'm hopeful that will come back into vogue. I think it will.
When did that change, would you say?
Dude, I don't know. It feels, first of all, I'm only 39 and I've only been relatively intelligent for maybe 9 years. I consider the 18 to 30-year-old male a pretty dumb animal in general. Sorry to my listening base, but that's true. So I get the sense that it probably started in like 2014 with people underappreciating the changes that were going on in the world. And my feeling now is that we're maybe on, if not the later innings, some of the middle innings of that narrative.
Yeah, I'm looking at my bookshelf. There's a book called Young Money, and I think it came out around 2014, and it talked about how Wall Street and in that suit and tie culture was losing out on talent to Silicon Valley, and how the banks and sexier finance, or traditional finance, I should say, was having to change their culture and their values and kind of what they stood for to kind of attract that talent back to traditional finance.
Yeah. And I think there's a reasonable amount of that that's reality. And then I think there's a reasonable amount of some of these underappreciated markets. I mean, dude, you had a commodity boom, the bricks and all commodities, what, like 2004 to 2010 or what, or 2009, like
Right.
ramped like crazy. People got super amped up. Capacity appears to have gotten too much. Now you have a decade of decimation. Like, who wants to go into that shit, right? I can go do something else that's way more interesting.
Yeah, okay, I get what you're saying. Yeah, traditional kind of infrastructure, raw material base. This is what's been so fascinating for me, like just the economy running, like me moving hundreds of rail cars from Quesnel, British Columbia, and some to Dallas, some to Atlanta, some to Kansas City, and then ultimately homes get built. And if there's a polar vortex dipping down into Chicago, we can't get lumber into the southern US from Canada. And things like that to me are so interesting and exciting because everything I read and hear and see matters. And I can see how maybe 10 years ago, like you said, all the generalists on equities and finance, so bear with me, but the commodity boom, a ton of capex, and then when it all fell apart, it's just nothing but overproduction and too much capacity. Like there wasn't a lot of volatility. I remember when I started at FC Stone, companies like that make money from futures markets going up and down. So there's hedging opportunities, and that's how they make money putting on trades for their clients, hedging trades. So they need vol. And when volatility is low, companies like that don't do well because there's not a lot of arbitrage opportunities when volatility is low. And so I started in 2014 in commodities and quickly moved into lumber. And we were just kind of coming out of that slog of working through and clearing the commodity markets as a whole, I feel like, definitely in lumber, into kind of a post-China US-based demand for commodities is how I summarized it.
What do you mean by post-China US based demand? Is China was the marginal buyer or seller or whatever? Is that fair?
Right. Yeah. Yeah. It was really interesting. Right when I started paying attention to lumber, China bailed out. Again, this is just
This is all opinion anyway. People need to do their own damn due diligence.
You're an intimidating guy, and I'm not that.
I'm intimidating.
So
I'm out here drinking red wine, talking about your tattoos.
I'm just trying to stay on your level of sophistication here, but I'll quit apologizing. So,
first of all, let's just drop the pretense. I am far from intimidating. I appreciate it. I'm looking at a dude that looks like he could beat me up. So yeah, no need to view me as intimidating.
I probably can. You're right. Well, at least your guests are always really sharp and fun to listen to. But so when I started in 2014, I would sit there and look at a flat price chart and just ask the senior traders around me, what happened here? What happened here? Why? Read old blogs, and like Twitter was starting to take hold in finance, and ag Twitter has been around for a long time. You get good info. But anyway, in regards to China, lumber went up to the all-time highs of $590 or something in 2006. It was astronomically high. And new home starts were at 2 million. Then it all came crashing down, and new home starts just slogged along, as we've all seen on the chart, still yet to eclipse pre 2008, 2006 highs. But lumber retraced pretty aggressively over the next couple of years. And so that's why. And it was China. So China's big infrastructure build and the 20% GDP growth, the ghost towns and the roads, and they would use lumber for concrete forming. And they just like to form curbs on sidewalks for the
that's interesting.
concrete forms.
Yeah, that's interesting.
They use it for furniture and crates and stuff, but when they're in and buying, it's not because they're building houses. It's because they need 20-foot boards to form concrete curbs on the road. That's, I think, a large part of when they come in and buy Canadian commodity lumber. But that was China was the driver. And then right around, there was every time I look at a housing starts chart post 2008 recession, it's just, I was not in the business, and I just couldn't imagine 600,000 home starts. How is there room for enough people to have jobs in that kind of industry?
Yeah.
And gosh, I think I started and home starts were 900 on their way to 1 million, I think, in the 2014-15. So I just started paying attention to China. And again, I went through an academy. I have a degree in journalism, and I know how to sell. So I just largely was just kind of trying to make logical sense of price and asking why. And the answer I kept getting was, well, China. And lumber in particular, there would be a lot of rumors and volatility because there'd be rumors saying, hey, China's in, they're making a block buy, and the mills are sold out for 6 weeks. They just sold everything offshore. And that was kind of always the threat from 2010 to 2014. And the reason I think a lot of commodity prices, I don't think that's
when you say threat, you mean that the threat would be that China would leave the market and...
No, the threat to U.S. buyers.
Okay.
Yeah, because everyone in our industry is scared of being caught short.
Okay.
And the industry model, almost everyone is short, meaning they're committing to sales with lumber they don't own yet.
Okay, so the reason that they're scared to get cut short is they're promising to deliver an amount of lumber in the future, and if they can't deliver it, then there's a chance that the price moons on them, and since they're short that future delivery, they're just absolutely fucked on the delivery obligation because they got to go into the open market somehow, overpay, and deliver what they need to. Is that fair?
That's fair, and I want to be careful using the word future. Technically, yes, in the future, but not necessarily using futures yet.
Yeah, true. At a future date.
Yeah, to home builders. Home builders come in and say, hey, quote this job. It's going to start in 3 months. And they'll quote it off lumber they don't really own yet. And they just kind of guess, like, what's my average cost of what I do own? What do I think it's going to be come 3 months from now? And they throw a number on it. And then they get the PO, and then they have a decision to make. Do we buy the lumber and just sit on it and wait for the job, tie up our cash? Or do we speculate and maybe the market comes to us and we can pad our margin and we don't have all our cash tied up in inventory? And what all lumber folks know is if China's in, that's the threat, China's in. It's not that you're going to have to buy it at a higher price. It's that you can't find it. You can't, there's not a price you can pay to get it in that time frame that you're in. So that's when folks get caught short, and that happened to the 10th degree this year.
Is that what made lumber moon?
Oh, yeah.
Because China was in?
No. Oh, I'm sorry.
Just people got caught short.
Yeah.
Okay, that's fair.
No. Yeah. So all this rabbit trail was me being a young trader early in my career, just boiling it down to China.
Yeah.
So I was watching a chart. The price of lumber was up.
And every question you asked, the answer was China.
Yes.
Yeah.
And it just didn't match domestic demand. So I'm like, well, I guess we should pay attention to China. And then they pumped the brakes in that 14, 15 time period. And the price of lumber was staying above 400 for a couple years, 2, 3 years. And then it broke below 400, went to 300, broke below 300, went to 215, I think is the 10-year low. And that whole time, I was just reading about China slowing down, and instead of 20% growth, they had 7% growth, and they're trying to, okay, they got all the infrastructure built for the rural migration of their population into the cities, and they're going to tighten their belt or whatever their narrative was. I didn't know. It was all over my head. I just was reading, and this is what was so fun and really hooked me to the whole industry early on, was I was able to read Goldman Sachs commentary about China and how China has used more concrete from 2010, some 10-year span, than the U.S. used in 100 years, and from 1900 to 2000.
Yeah, that's crazy.
I remember reading that in the Goldman Sachs deal. And again, this is all very sexy to me. I thought it was very cool.
Well, it is cool what they
me.
did. That's wild shit. When you see those ghost villages that they built, it's like, what in the world is going on?
They're bringing them down.
Huh.
I just saw some viral clips. They're like imploding entire blocks of these apartment buildings.
That's insane.
It's wild.
So much waste.
And really, that infrastructure investment that they had was sucking up so much lumber to form the concrete that Goldman Sachs was talking about.
Huh.
So it just made all the sense in the world to me.
All right, dude, hang on, wait. I'm visualizing it now in my head. When you're watching a sidewalk get built, there is, unless I'm wrong, there's a bunch of wood that forms sort of the curve, and then like every maybe yard or whatever, there's a 2x4, some structure, and then they pour the concrete in the middle of it, right?
Yep.
Okay. Yep. All right. Yeah. Now I understand what you're saying. That's wild.
Yeah. It just, they put the little metal stakes next to it, and they form it up, and they take it to the next one. Their lumber's full of, it's all messy and got all sorts of residue on it. But I didn't witness this, but that's what they were sucking it up for. And they notoriously bought, we call it low-grade lumber. It didn't need to be pretty. It didn't need to have like a smooth and square edge and all. It just needed to be relatively straight-ish. But there's not a lot of that that's made. Like ideally, the mills make high-grade wood when they process a log. So they would suck up all the low-grade and then start buying high-grade. They didn't care. They needed it to form. Now, and again, I'm a little bit in over my head, but other commodities, China looked inward. Can we do this ourselves and store grain and process aluminum and copper and store blah, blah, blah. They did the same thing with lumber. They created sawmills. They started buying logs instead of finished lumber and tried to supply themselves. I think largely it made a significant impact because China now is nowhere to be found in our lumber market. You just never hear about China coming in and making a buy. And 8 years ago, 7 years ago, when I started, it was just everyone's looking over their shoulder. Do I need to buy now before China does? And that's not a threat anymore. So it was interesting to me as an early trader saying, okay, well, if we just watch China, I feel like that could tell us where commodities are going to go. And lumber fell, oil fell, grain prices fell in that right around that 2014, 15 year time frame. To me, that's just when China turned it off. They're trying to pivot to when I was taught in my academy there, because China was such a huge market for ag and the ag folks at FC Stone. You look at the diet, and they were, I'm not going to remember. Maybe this is super common. Everyone knows what it is, but they're kind of moving from rice and soft grains to meat and
more proteins and whatnot.
Right.
As you move up the well cycle or whatever.
Yeah.
Yeah, that makes sense.
So that's like that was what was transitioning. And so as I was observing it, I'm okay, they got their infrastructure built, and it's easy to jack up your GDP growth when you spend on infrastructure. But then I remember feeling like they were just making a concerted effort to pivot their economy to where the US was and was headed, service-based stuff, technology, I mean, certainly manufacturing, but less so. But regardless, I remember that right. I just know that they just shut the valve off on infrastructure spending. And so all the commodities fell. All the commodities that all that CapEx that was built into the pre-recession, and then China was just gobbling everything up.
Everybody's
like
built
another
out
round.
as if China's going to stay there, and then China shuts it all off, and then you got all this freaking overcapacity.
Ton of it. And lumber was the poster child for that.
This is called the capital cycle. Right here.
Okay. See? These are things journalism majors don't know.
Bro, I'm going to send you a book for real talk. I'll send this book, Capital Account. It's sick. It'll change the way you look at this stuff. It's by Marathon. It's not Marathon. I don't know what their actual proper name is, but Marathon's the investment group. It's a fantastic book, man. And the way that they invest, well, I shouldn't say the way they invest, but the one thing that they made popular was the capital cycle theory. And basically what you're talking about is like, you want to, if you're going to play sort of cyclical trends, I hope I'm not misframing them because I really, really like what they do, but I think I'm right. You really want to be wary of the kind of situation that you're referring to. And what you really want to look for is after, I don't know, a period of time when there's been underinvestment in an industry, perhaps because that industry expanded too much capacity and a main buyer left the market. Right. If there is some sort of demand pull that comes up, especially if the industry is sort of in shock from, say, 5 to 6 years of not making money because they overinvested for the previous 10 to 15 years, you can have these cycles that you can invest into. It's probably the best term. They wrote 2 books, Capital Account, or well, they didn't write, but the 2 books that cover them are Capital Account and Capital Returns. I'll send you Capital Returns. Send me your address after this.
Deal.
Capital Account's $500, and I like you, but we don't know each other that much. The other one I can afford.
Well, yeah, if I actually read it, then
you should read it. It's dope. Real talk. It's one of my favorite books out there.
Well, it sounds like I like you said,
might live it.
A capital cycle. Like I was just kind of dumbing into that, saying, because you get into these euphorias, and I mean, we'll get there with lumber recently, but you can imagine the narrative and the rhetoric around China coming out of the recession. Some would argue they did it right as far as their spending, but they came roaring back and just sucked up all the resources, and everyone retooled and forecasted in anticipation of China being there. And then one day they weren't. And sawmills were as guilty as anyone. And that scar, 2006 was the peak of the housing market, bottom 2008. That certainly was scarring. Lumber housing was at the epicenter of the tragic recession we had. But I think for sawmills, this dependence on China was the only game in town. Commodity lumber, what we're talking about, softwood framing lumber, the stuff that goes behind drywall and builds your house, not hardwoods, not decking. It's driven solely by U.S. single-family home starts. And when there were 500,000 homes being built a year or less.
Let me ask you this, though. What about repair and remodel?
Yeah, so R&R is something I always overlook, and it is from the data that the mills give us, their R&R businesses approaching 50% of their production.
Yeah, okay.
And that's a relatively new, I'd say 5 to 6 year kind of market share, market mix change. And I will say the caveat, without having the data in front of me, is a lot of these Canadian mills own Southern Yellow Pine production, and Southern Yellow Pine is decking material, and that's huge in the repair, remodel, DIY world.
Okay.
But maybe they do have it segregated. I don't know. So all I had was China. So just leaned into it, and I had all the relationships, and the governments were writing letters of credit, and everyone was backing the credit risk. Because one of the early things I learned, just hearing stories of trading grain with the Chinese government, if prices fell and your boat was on the way over there, they'd probe it and claim it was GMO, and they'd refuse delivery. An entire ag desk across the world at this commodity firm I was at was trying to find a home for these boats of soybeans because China just refused delivery. And so I was always taught to be fairly weary of business deals. And the lumber folks were hot and heavy with those folks. And there's a lot of outtake, and it was a great outlet, and it saved the lumber industry. If that wasn't there and the lumber industry only had 500,000 homes to supply, I don't know what it would have looked like. So I'm not saying it's a bad thing, but right when China started to turn off that infrastructure investment, purchasing lumber and raw goods, U.S. economy started to wake up a little bit, 14, 15, 16. And housing starts were quickly approaching 1 million. And I think I've said this before, but if you're a home builder, if you're a lumber yard, and if you're a sawmill and you're still around 14, 15, 16, it's because you're fairly conservative and you know what's possible. Really slow to hire, really slow to add plant equipment, don't want to get over too leveraged and all the things that they learned.
Don't get over your skis.
And so it became, on the demand side, folks never really leaned in and reinvested or got aggressive from a capacity perspective, home builders on down, where the sawmills did because they had China. And then China went away. The price of lumber went to $220 or $215 per thousand on the futures chart.
How many people are making money at that level? Anyone?
No, nobody. Even back then, 7 years ago.
It's a long time.
Yeah. Nobody. And the last time lumber did that, 2007 and 8, it got down to $127 a thousand. And I wasn't in the industry, but just talking to folks who were, that the mills, several of the big ones, just kept pumping out lumber for just we're all lumber traders. We're not, again, super sophisticated, but the narrative was they just got to keep pumping lumber out to produce cash to pay the bills, no matter what the price is. And
lose money to pay the bills. I like it. Sound strategy. Yeah. Make it up in volume.
Yeah, that's right. Someone said that to me. I posted a big loser on its surface.
Yeah, I saw that. Yeah. And somebody said make it up in volume.
And I was so confused. I had to Google it. I'm like, what? This guy's smart. Why is he saying that? Yeah. And but that's literally what I don't know if it's what they did, but it's because I wasn't around, but it's what I was told. So it was kind of a race to the bottom and then survival of the fittest. And again, this is kind of like secondhand interviewing folks who've been around longer than I was. Like, what happened? I say this ironically, but I would have loved to have been around in 6, 7, and 8 to experience that market and see and feel myself what I'm being told by.
Yeah, what you would have been like then.
Yeah. So I got to relive it through articles and interviewing and asking questions of veteran traders. And what I surmised was some of the bigger mills were going to this is just me guessing. That's kind of what I would do. If I had the money and the wherewithal, I would crush the market, crush my competition.
Yeah, run them under and then on the back end make money.
Yeah.
My man.
Run everyone out, consolidate. No one makes money at $215 per thousand. Neither do we, but we get the cash to burn it. And that's what I think happened, is that the bigger mills that had, again, the wherewithal were able, I don't want to say they drove the market down purposely, but they weren't too scared of it, knowing whoever can make it to the other side is going to be in a really good position because there's just going to be less producers. And that's definitely the case on the dimensional lumber side and the panel side. A lot of consolidation ever since 2008. So when China left, it was all U.S. demand. So then it's like you just get obsessed with the housing market. The good news is there's a lot of really smart folks, and there's not going to be a lot of hidden insights into U.S. home starts. It's pretty well covered. And as a trader, I'm certainly concerned with long-term trends, but I'm more quarter to quarter, month to month price fluctuations.
Can we talk about your business a little bit just to frame it? So you mentioned that I used to bank food companies, right? So the way I think about commodity markets is you've got spot prices and then you've got basis and you've got carry. So basis, if I remember correctly, is the amount of money that you can make by transporting it from point A to point B. Is that fair? And then I think of carry as time. Thank you for explaining how dumb I am. I appreciate this.
Yeah.
But we should break that down because you said basis trading, right? And then carry?
Yeah. Yeah. So basis and spreads is what, if I had a tattoo, that's what it would say. Basis and spreads. Yeah.
That could kind of be, you could get kinky with that if you wanted. I don't know.
It depends where you put it, I suppose. And higher for longer, for that matter.
That's true.
So basis, you're probably referring to what's taught in the textbooks as local basis. And basis is it's a spot price in any geographic point
at
in the
a
country.
point, right? Yeah.
Right. Less freight. So you always got to kind of back off freight because freight's the same for everyone. You got to figure out which local market is paying up the most for whatever commodity you have. And that's very common in every major traded commodity to talk in basis terms, like what's NOLA basis, what's LA basis, what's Chicago basis for corn, for wheat, oil. Traders talk in basis terms, and basis.
So real quick, just before we get ahead of that, I see NOLA basis, which is New Orleans. I see LA basis. If I were somebody that was interested in arbitrage, I would look at the cost to transport, what is it, 1,000 board feet is how it's quoted?
That's right.
From New Orleans to LA, if there is an opportunity to make money, I could arbitrage those two things by selling LA, buying New Orleans, and transporting it, or some version of that, right?
Yes.
Okay.
Yes, some version of. So here's a really interesting part. It's just that it's an inefficiency. I tell folks when I'm teaching this, you buy what's cheap and you sell what's expensive, and then they come together. In lumber, there's not a lot of people that pay attention to that stuff. So basis is the difference. And when talking about commodities, basis is cash, which is spot price, minus futures. So it's defining the premium or the discount of the cash market to the futures market. And if you just think about that in real simple terms, it's just a valuation of time.
Yeah, that makes sense.
What does it cost if I need it today versus if I can wait 60 days? And that 60-day carry tells me everything I need to know about the market. And in a market like lumber, where everyone's chronically short, basis skyrockets suddenly all the time.
Huh.
And it's geographic market to market. And lumber's not easy to transport. Takes a lot of manpower, forklifts, flatbed trucks. It's not efficient to load and unload compared to filling a grain hopper. Have you ever seen a train get filled with grain? It just slowly rolls by the grain elevator and it just dumps it in there.
Yeah, man, they got the tracks that go around the elevator dumps it in, and then it moves in, right? Or it moves out.
Yeah. There's like 2 people operating all that value.
Yeah.
In lumber, it's a truck driver, it's a guy counting the sticks, it's a guy on the fort. Yeah, it's just cumbersome to move it. So it's not, and that's what makes lumber unique. You can't transport it to NOLA to LA. You can't. There could be a arbitrage opportunity on paper, but the realities is you can't get it done. It's similar to, I tweeted out the arbitrage opportunity on the futures contract, how you could buy lumber at $460 and the futures contract was trading at $500 and it expired in 3 days.
Yeah, man, how do we do this? Can we raise capital to do this? That would be sweet.
Yeah. You got to own a mill because mills
That's
are the
unfortunate.
only ones. That's right. Mill, and you got to own a Canadian mill because the contract's written specifically for Canadian lumber. It's a Canadian lumber contract. It's actually priced FOB British Columbia. And just the restrictions of the contract, there's so much shipment risk that you have to control shipping and lumber currently, and has been for 25 years. Everything's bought delivered. Whoever's selling you the lumber arranges freight. You don't even see the freight bill. It's just a delivered number.
Yeah. At your point of delivery, right?
Right. The rule of thumb, you take futures plus $88, it gets you to Chicago, plus 120 gets you to Dallas, gets you to Atlanta. But at the end of the day, it's all FOB Canadian mill, because we're all paying $88, or at least the mill is charging us $88.
Yeah.
We don't face the rail line, so we don't know.
Do you do physical, and will you deal with the railroads? I thought you will buy cars, right?
Yeah. So I'll back up and talk about my business. So my business is a physical trading firm. That sounds cool. A trading firm?
It is cool, man. I think what you do is dope.
Yeah.
And on Labor Day, you said you pay people, so you keep people, which is nice.
Those are ancillary businesses that aren't in the lumber, out there outside of lumber, but heavily involved in those, especially on the hiring side.
What are those businesses? The hell do you do, Stinson Dean? You are an interesting individual.
Well, it started with lumber for sure. And so I'm a lumber trader. I'll get into it, but I think it's important for context. I buy rail cars of lumber that you see when you're stopped at the stoplight and you see lumber go by on the train. I own hundreds of those rail cars. I store them. I store the lumber in warehouses across the country.
Do you own your warehouses or do you lease them?
They're neither. It's kind of I just pay per rail car.
Okay.
If I don't buy any rail cars, I don't have any overhead.
Yeah, that makes sense.
Yeah. And in lumber, we call them reload facilities. So I place lumber. I'm in Texas, several places. I'm in Atlanta. I'm up in the East Coast, the housing markets. When someone needs a lumber quickly, because again, they're short for all sorts of different reasons. Maybe they misbudgeted. Maybe they got a new customer all of a sudden. Maybe they're waiting on a rail car that's stuck in a polar vortex and can't get through Chicago. They call me because I have lumber on the ground ready to go. Canadian lumber.
Oh, you smart man. You are smart.
Well,
Can I call you for my new house? Because they're going to screw me on this fucking thing. I know it.
What's going on?
Oh, dude. It's right now, nothing. It's just pencils down. I just got my first bill. It's terrifying. It's going to suck.
So I've never built a house. So how does that pencils down? So you got your first bill, but like, are your prices fixed? Are they cost? Like, how does it even?
My prices fixed? That's hilarious, Stinson. No, they're not fixed, and I cry every day.
Is that your choice?
No, real talk. Well, dude. So first of all, framing it, you make your wife happy. That's number one rule in life. Happy wife,
Sure.
Happy life. Real talk. I'm excited to build what we're going to build. Where I live in Florida has a lot of old inventory, lots. So with the hurricane code, and I grew up down here, so I saw what Andrew did to Miami Homestead area.
Mm-hmm.
My dad had a single engine plane, and we flew supplies down to Homestead after that hurricane. And you can pull it up on the internet and just see, it was just a line of devastation. It looked like people had bulldozers and they just like drove them across the state. But as a kid, flying and seeing sort of the dichotomy between the houses that made it and the houses that got blown down, it left a lasting impression on me. So a lot of these houses are older, and given what is going on with real estate where I am, we were fortunate enough, we bought a lot in September before sort of everything skyrocketed. And we're going to build what we want to live in for, I don't know, 15, 20 years or whatever. Soon enough, maybe people will come and do live podcasts. I'll have like my own little Rogan setup or whatever. But they're penciling things out. You got to go through all the committees. You got to go through permitting and Who's doing that? Are you doing that? Oh, no,
builder?
Man. So we have a builder. They can handle the permitting. And we have a designer that's working with my wife. I mostly say yes. But we started this process in probably December, and here we are in September. And to me, my wife would argue differently. She does all the work, so it's not fair for me to actually say this. But I don't think we're any closer to building this fucking house than we were 9 months ago.
I just think 9 months ago, January,
I
there's a
just
little
pay
lull
rent. Every month I pay rent checks and I say, when's this going to end? And the answer is longer than you thought.
So do you know what your framing package costs?
No, I'll find out for you though.
Because this help the risk transfer, right? Is your builder putting lumber price risk on you, or are you putting a?
Yes, cost plus 15.
Okay, it's cost plus. So he's looking at you and you're getting, hey, give me an updated quote, give me an updated quote.
Yes, and I'm actually right now, I'm like, dude, I want to get in there and I want to buy lumber right now because my general theory of the case, heavily influenced by my man Mike, is that as people come back from traveling through the summer, the risk of getting caught short lumber when I need it is scaring me.
Yeah.
I don't want to have a situation where I'm building a house
You feel it.
last year. Like, fuck that. I'd just rather lock in the costs and pay the storage.
Yeah. Yeah. Okay. So I don't know how common this is a custom home build, but cost plus, I know that's a thing. But then for the builder, it's just completely risk free.
Mm-hmm.
For large home builders, they don't do it that way.
No.
And large home builders don't like to be committed on material they don't own. So they go to their supplier and say, hey, give me a 90-day price. And their supplier typically does it, like a retail lumberyard.
Yeah.
Big chain. And what I have theorized is
Who are the big lumber yards?
the biggest one is Builder's First Choice.
Yeah.
First Source.
Yep.
Builder's First Source. BFS. But their ticker is BLDR. They're huge. They just bought number 3 in market share last year,
Yeah.
which was BMC.
They seem to have an appetite for M&A too.
Mm-hmm.
Like they're looking to go out and buy, it seems to me, but I don't know that 100%.
They buy component trusses and wall panel manufacturing plants regionally. They bought a software company that they use that was third party. They're a monster. And my theory coming out of this, actually, price started to make me think this was actually what was happening. So price went up. Builder's First Source, 84 Lumber, Carter Lumber, everyone is committed 90-day, sometimes longer, to Pulte, D.R. Horton. And so Pulte and D.R. did not feel the price increases until Q3 started.
This year.
They're kind of quarterly pricing. Right.
Yeah.
The market was moving so fast inside of that quarter, that Q2 quarter, the homebuilders didn't feel that.
Yeah, they got hit on the first half and then they benefited on the downside or whatever, and they just didn't feel it.
No. So I don't know how my fingers look, but
they look like this.
April,
they're going up and down.
April 1st, they got priced.
Yep.
Okay, so they're locked in at this level.
For 90 days for the quarter.
Yes.
Okay.
Yeah.
So the price goes up and then they don't get rebid until, call it June, and they didn't even feel the price go up because they're bidding at 2 points that are low. Okay, fair.
Yeah, they caught the round trip. The home builder.
I'm enjoying this conversation. I hope you're enjoying this conversation.
I love it. I hope you are.
I really am.
Well, I hope you. I want to keep digging into your home building process.
Okay, well, let's do it. People are gonna have to listen for fucking hours. They can deal with it. I don't care.
Well, I guess I really got the answer I was curious about is who has the lumber price risk, and it's you.
It's me, yeah.
And it's a good illustration of what happens. So big home builders can demand these risky locked pricing. It's risky, clearly, and it turned out really bad for whoever's holding the bag on the short lumber risk, and it wasn't the home builders.
Will be me.
Right?
Yes.
Well, it was the home builders' suppliers, okay? And then, so as Q3 started to get priced, they start bidding stuff leading into July 1st. And as that big run-up in prices started to get quoted, then home builders were like, that is too expensive, actually. So, no, we're not going to do that. But more so than price, everyone was throttling. We don't really care about price necessarily as much as we can't tell a home buyer your house is going to be built before school starts. And then actually you can't move in until October, maybe. It's happened to a buddy of mine.
And this is because of labor?
Someone can speak to it better than I could. As far as the delays,
it seems like supply chains plus labor is the answer to this question. That's what it seems like to me.
Yeah, and that August to October delay, absolutely. It's because they're waiting on stuff to finish the house. Because they got the lumber at this point, but then they can't get all the finished stuff.
Yeah, okay.
Everything from drywall mud to windows. But when the home builder finally started to get quoted at the astronomical prices, that's when they pumped the brakes. But not only that, the supply chain, lumber yards, were no longer in this kind of reactionary kind of behavior. Why would I give you a 90-day price? That did not work out for me last time.
Yeah, I got screwed the last time. You got to bid on 2 low points. I don't want to deal with this again.
I'm not doing. So this quote's good for 30 days instead of 90. And the build process for a production home, I'm completely guessing 90 days, let's call it. Well, now all of a sudden the home builder has a decision for the first time in this cycle, housing cycle going back to 2008. Do I want 60 days of lumber risk? The home builders are not set up to manage commodity
lumber
price
risk. Yeah.
They're not, because they've always been able to transfer that risk to their supplier until now. When their supplier is like, no, we're not doing that again. Good luck. Good luck finding someone who will. And someone will eventually, and they'll make a bunch of money until they don't. But it also plays into another element of this BFS merger. They're all of a sudden big enough to start pushing back on home builders. They are the biggest lumber yard across the country that their corporate salespeople can talk to their corporate purchasing people and strike deals for the entire country. There's only a handful of yards that can do that, and BFS is the biggest. I think they're 2x almost, the next biggest, just location-wise. And all of a sudden, instead of having to compete and be like, all right, we'll do 90 days to get your business, Mr. Customer. Nah, we're not going to do that. And I'm not sure who else you're going to go to service your nationwide needs. Now, this all me, no one has told me that. I just want to make sure that's clear. But that's what I would do. I think common knowledge now that 90-day pricing is not normal, and it's all been throttled back. So that forced the home builders to be like, what do we do? And they're not sophisticated. They don't have purchasing. That's not where their resources are. It's really simple to buy if you're a home builder, because you just pass the quotes off and pick the cheapest one, and it's the same price for 90 days. Now all of a sudden they got to handle commodity risk and all the things that come with it. So I think their decision was, well, we're just going to slow down and increase margin. And instead of going at the same pace, we're going to throttle it back because we don't want to and can't handle input volatility.
Or they just start signing contracts like I did, where they do cost plus.
Yeah.
Right? That may be the outcome.
Yes, which naturally there's going to be just less people willing to do that. You can tell me to kick rocks, but
no, I think you could be right.
Does a bank sign up for cost plus? Don't you have to go to a bank and be like, I need a loan? And then you're like, oh, well, prices went up and I'm cost plus, so I need more. Like, I don't think banks play ball with that model.
Yeah, I don't know how many banks are going to finance construction risk anyway. I think that the interesting intersection of what you're talking about, and I had a podcast with this guy, Logan. I think the issue is we're in the middle of a demographic patch where household formation is so strong that I don't think the buyers are there. For the first time in a really, really long time, demand is there on the demand side. Demand's there on the demand side. There you go. You're welcome, folks, for listening. But I think this is a different time where millennials are starting to have babies. If you are a younger millennial than me and you haven't had a baby yet, I assure you, when you have one, your wife's going to want a house because she wants to nest. You're going to have a house. So to have this kind of dynamic going on the supply side, it's very interesting. I don't know how it all plays out, but the demand side,
higher prices,
certainly seems like it.
Yeah. The demand side's well covered.
At least in the lumber market. If lumber supply hits the market, you could have a ramp where higher prices lead to lower prices, which is sort of the story of commodities.
Yeah. So we've covered a lot of ground. And one of the things, so that the mills were scarred from, depending on China, so a lot of mills shut down. A lot of capacity's been shrinking. If you look at the data for 7-8 years out of Canada. So they're just slow. Everyone's slow. It's like your capital
cycle theory.
What you call it? Cycles. I was going to capital calendar.
It's fine. We can call it capital calendar. But it is a capital cycle theory.
It's like this most recent behavior, most recent pain is driving future decisions. And the producer side, their pain was China turning it off, and they have all this extra capacity and winding all that down and trying to clear the market. So now they're just slow to lean into what you and I and a lot of folks believe is just the greatest demographic housing market in a generation.
You know what's wild? So I talked to you before we went live, and I was on a call. Their inability to hire labor is really, really, really amazing. The amount of people that they need to hire in order to have somebody in the Southeast stay for a year, it sounds like a very, very tough business to be in. So I then say my biggest fear as someone that has some exposure to lumber prices is, can capacity come on top of getting a mill permitted and getting the equipment in place, which seems like it's a 12 to 18 month process as it is. You then got to get people that want to work. And that seems like a much harder, that's not just snap your fingers and people are coming to work. That seems very difficult right now.
Yeah. And it's very common. I shouldn't say common, but that among the smarter people that I talk to and listen to, that's the first thing they talk about. Because we're talking about the Southeast. We're talking about Abbeville, Alabama, and middle of nowhere, Mississippi. And it's hard to find labor down there that wants to be there, like you said, and whatever their metric was for having someone stay for a year. The answer is automation, but that's not happening very quickly either. Just assume that takes a while to develop, and the Canadians are pretty good at producing lumber from an automation perspective. But yeah, so the labor constraints, okay, can you build a mill? Because there's plenty of wood, and I haven't covered all this because I think I've definitely covered it, but there's a lot of wood in the U.S. Southeast, Southern Yellow Pine, and there's not enough mills. It definitely could use some mills. There's room for more production in the Southeast. One of the reasons there isn't, in my opinion, is the Southern Yellow Pine lumber, the species, is not what we use to throw up houses as quickly as we can. Production builders don't use Southern Yellow Pine to build a single family home. It's too dense. It's overkill from a strength perspective, and it twists, warps, wet. It's hard to work with. A lot of waste because of that. It doesn't store well. So if we're throwing up tract homes, production homes, churning and burning, you just can't use Southern Yellow Pine. Not to mention the risk of, if it's not installed perfectly, it'll twist behind your drywall a year and a half later, and you got a big bump in your drywall, and the builder's on the hook for that. So it's risky to use it. As a stud, it's a great application for plate, horizontal.
Why? Why wouldn't it twist horizontally?
It's got all the weight on it.
Structurally it can't handle it, but if you're just framing or whatever horizontal, then it's fine.
Yeah.
Well, I like how I use framing as if I know.
I'll clarify. If it's horizontal, if it lays flat, it just stays nice and flat. But if it's vertical, it can twist and torque, and as it dries.
Torque and wood, you don't want that.
Mm-mm.
I'm sorry, I couldn't resist.
So I'm trying to stay on track here, man. We've gone from China to cost plus to marriage advice.
This is how have we gotten to marriage advice? The marriage advice is love the one you're with.
Well, happy wife, happy life.
Oh yeah, that's true. That's true.
And the home building process.
There's no need to stay on track. I just want you to know this. This is not a professional podcast.
It's weird because I see your teleprompter there, and it looks like you're going through the script that we...
No, man, I'm taking notes as you're speaking.
No, everything's scripted here.
That's true.
Business Brew.
It's definitely true, especially the wine.
You don't do video because there's a teleprompter there.
Yeah, that's fair.
Teleprompter is that's a big dig among boomers. If you say someone uses a teleprompter, it's a
man.
It's a big, slight.
The drawback of a format like this is I've had some conversations recently that they kind of get going, and then I'm like, okay, so now what do you want to talk about? And then it gets hitchy in the rapport. This kind of conversation, not a problem. But I can see the merit in having a teleprompter and having script. I like how spontaneous all this shit is. And it's my show, so I'm going to keep doing it.
It depends how much editing and back end.
Almost none.
How committed you are to it. Yeah.
My only commitment, I edit stuff. If somebody says to me, I said something and it would be offensive, or I said something that was really dumb, I'll edit that. But outside of that, I'm not really a believer in edits. I say enough stupid stuff. If somebody says something stupid on my show, well, you'll be able to listen. We'll edit whatever you want, but we're not going to edit much.
No, I'm not worried about it. It's so fascinating to me. And again, it goes back to when I was an early trader. What sucked me in was rural migration from China had a huge impact on my daily life.
Huh.
And I fell in love with that. So I became a political junkie, and I became demographics and interest rates and macro and micro and geographic, different cities. So much that you can put together a mosaic to come up with a market outlook and a thesis.
Do you know Logan?
Yeah, I love Logan. Yeah.
He's great, man.
Yeah. So Logan's Twitter, when I got started in lumber and started paying attention to housing, 14, 15, 16, I learned so much reading his blog. And I'm like, who is this guy? He's like, oh, he's a mortgage broker.
Yeah, okay. Isn't that wild?
Yeah. It's like, I'm a medical device sales guy. So who cares? And I learned so much from, and he helped form my thesis. When I started Deacon Lumber, I had a nice little business plan and went to all the banks, and here's the thing. And I need to go reread it. I wrote it in 2017, going into 18. And it was all about demographics. It was about smaller home sizes. It was about lack of Canadian lumber. It was about the aging out of the lumber trade, the talent in the lumber trading pool. Again, like you said, there was a season there where commodities, not a cool thing to be a part of. Lumber, the last on that list. And so I talked a lot about that, and competition's going away, and expertise, and people. Commodities is a just-in-time business for a lot of different reasons, not the least of which is cash. And just-in-time inventory, hand-to-mouth, that's a whole, we joke, MBA, inventory management philosophy.
Well, dude, the thing that's crazy is all that just-in-time stuff, I think, is really biting us in the ass right now.
Yeah. And so everything from masks to dishwashers to lumber, everyone that Lean, Six Sigma, and like
leaned into lean. Yeah.
Everyone's lean, turn your cash, turn your inventory, and several financial benefits, metrics that you guys will be more familiar with. But for me, it makes sense from a risk perspective. It's how people manage risk. If I have less inventory, then if the price goes down, I'm not getting hurt. And the way they manage risk is to turn their inventory and reduce their time to market, the time they have risk on. So when I was starting the company, my pitch was, I know how to manage risk over time, and I will carry large inventories, and I will be the natural offset to an industry that wants to go lean just in time. And compounded with the supply chain logistics of lumber being 6 weeks away in Canada, needed to build a house in Houston, and I can get it to you tomorrow, and the industry being chronically short and lean, it's a good place to be if you can be the guy who can actually be just in time next day. Because if you don't buy lumber right from a quantity perspective, not from a price perspective, but if you underbought your needs and projects are going to start in 3 weeks, you can't just go buy mill direct, best pricing, no middleman markup, and get it there. You're you're out of luck. You got to go to the secondary market. It's got to be rolling already, or it's got to be on the ground. And there's all sorts of reasons why someone would be scrambling to buy lumber. They thought the price would go lower and it didn't, or they under budgeted in their meeting, because lumber yards have to think, talked about 90-day pricing, 12 weeks. What are we going to need 12 weeks from now? And we got to start making those decisions over the next several weeks, so we actually have it 12 weeks from now. And things change over 12 weeks. Jobs get delayed, canceled, changed, and of course the dynamics of the commodity market. So the business, I know we're talking about Logan, but
so how do you finance your business? An ABL line, a credit line?
Yeah, so I use an asset-based line of credit.
What's your advance rate? Like 90%, 85?
Well, that's another tattoo. I don't think you're going to see that one.
It's just what I used to do. That's the only reason I'm curious.
Yeah,
we would do it on grain, so
yeah,
90 is a little high. I would think it would be closer to 85 of liquidation value, or 60% of cost, something like that.
So this is interesting, talking to you, who lent against grain. Did you guys care if it was hedged?
I think we certainly preferred it from an income statement perspective, yes.
But on your advance rate?
Yeah, I think that you would have, on a borrowing base, if it wasn't ABL, if it wasn't like you were sending us reports on a weekly basis, unless I've got my numbers backwards, which is possible, but I think that we'd probably only advance like 65% on inventory.
That sounds right. So I have advance rates that are dependent on my hedge ratio, which makes sense.
Yeah.
From a banking perspective, you'll lend more aggressively against price risk managed inventory.
Yeah. AR, I think, was like 85%.
Yeah. We insure our
depending on credit profile.
We insure our AR too. So if it's insured, it's closer to 90.
Yeah.
And if it's uninsured,
that makes
it's
sense.
less. And lumber has a really good track record I've never had a claim. I've never been around one in 7 years. I mean, I know it just kind of takes one cycle, but I haven't been around one. So pretty strong. And people pay in 10 days. Everyone has to pay in 10 days because everyone's starving for cash. That's how the market dictates our terms. Very few businesses can carry their customer for 30 plus days when your main product just quadrupled in price and you got this huge inventory at this high price that you're borrowing against. Mills are no different. The pressure, because we talked about this, we'll make it up in volume. It's a cat. Yeah, I'm not an analyst. I've never even looked at the real.
You're a business guy. You know what you're talking about. Just, you could talk.
So it's, okay. So it's, I got to stop apologizing, I guess.
You got more street smarts than most people, man. I think your take is interesting to hear.
Well, especially living it now, because I got to watch my cash because I buy lumber and then I have to hedge it. And so I got a margin call I got to budget for. So I always got to have a very significant chunk ready to deploy that next day as I get margin called on my short futures position.
But don't you have the physical? Doesn't that protect you from the call or no?
It does on paper,
huh?
But you still have a liquidity obligation to pay my futures broker.
Okay.
Whoever clears my futures trades. And from a borrowing-based perspective, my mark-to-market value of my inventory is
not 100 cents on the dollar.
Well, it's 100 cents on the futures side.
Huh.
So as futures go up, the value, I explain it to folks, my break even fluctuates with the futures market. So I get advanced against my break even price, which is my physical lumber position. Let's say I own lumber at $600 and I hedged it at $550 and the market goes up $50. The futures market goes up $50. Now my break even $650 and that's my asset value.
Okay. That makes sense.
And so I have a fluctuating break even if you just think about it from a flat price perspective. But from a basis perspective, I own it at 50 over the futures price. And wherever futures is, I add $50 and that's my break even. But the cash cycle, I feel like in any commodity business, I'm only intimately aware in lumber, it just forces a lot of bad trading decisions. Because you could have, I know a lot of us right now have a massive pile of lumber Very, very big pile. I mean, the price of lumber is down 75%. And some of us hedge it. A lot of them don't. And if you don't sell it, the bank doesn't know about it. Until you sell your inventory at a loss, a bank should be paying attention largely, but it's not unheard of.
You're sending them your cost.
I am.
No, but I'm just saying people generally are
right.
sending them the cost on their inventory. So
Yeah.
until you realize the loss, you can maybe hide from the fact.
For a while. And lower of cost or market, and how often are bankers... I have a sophisticated banking setup compared to the industry. I just know that from consulting and getting started. Most folks, most small businesses are financed aggressively against AR and 50% against inventory. Well, lumber just fell 75%. They should have a margin call if they bought at the top. Technically, to me, there's not only unrealized losses that no one knows about. Anyone does an analysis, I think there's a lot of margin call just based off of that advance rate of 50%. You could have bought lumber at $1,100. That was a deal at some point. And you could have bought it on the way down. And now it's worth $500, $550, $600.
So what were you thinking when it was mooning? As somebody that I perceive your business to be somebody that is... Your value proposition is somewhat reliability of delivery if somebody can't get something, right? So did you feel forced to buy inventory, or were you skeptical of buying inventory at that time? What was going on in your head?
So I trade basis. So I don't really care if the price makes a new all-time high every day, because there's two prices we're looking at. We're looking at the futures price, which we can all watch, and then the spot market, the cash price. And I'm arbitraging the difference between the two. And I have a long thread on Twitter, which I'll update every 90 days or so. I have made the best trades in my short career buying lumber when it was at $1,500.
Wow.
Because I hedged it at $1,700. Okay. Futures went from $1,700 to $450. But this particular cash item went from $1,500 to I sold it for $650 or something. And
was this is what you were talking about when somebody was like, make it up in volume? Wasn't this the example?
Yeah. And there's more. There's a longer thread, which I linked to on there, about a swap. I said, hey, the market was at $1,500. And I said, hey, I'll go long at $1,300 for the next 2 years, 5 cars a month for 2 years straight on a swap. The idea being it's just financially settled and you don't have to be in the lumber business to take me up on this. Where I will settle up on 5 cars worth of lumber against the print price, which is a publicly available subscription price that we all kind of use as a benchmark. So settle against print. I'll go long at $1,300.
Which means you have the obligation to deliver to somebody 5 carloads at $1,300, right?
I would be taking delivery in that example.
You're taking delivery. Okay, my apologies.
So I tweeted out, hey, just as a hypothetical, because I knew how it would end up, I'll go long for the next 2 years. I will be long at $1,300. You will be short at $1,300 for 2 years, some kind of volume schedule. I framed it as a swap. So it's not a physical product with the idea of just being anyone could do this. It'd just be counterparty risk. And if you go read that thread, I hedged it at $1,700. What's 24 times 5? Whatever that number is. Again, this is hypothetical. My break even after picking up carry, which is such a huge part we haven't necessarily touched on, but carry is just a function of time. How much does it cost me to carry it from one contract expiration to the next versus how much is the futures market paying me to carry it from one expiration to the next? Okay?
Yeah.
So think about it like this. If I could buy lumber to spot market for $500 today, and the futures market today it's trading, there's a forest fire at a sawmill. I think it got up to $650. I could sell futures at $650. Well, let's call this 98% correlated Apple, and this is a real trade. I buy it at $500, sell futures at $650. The futures contract I sold expires November 15th. Well, it's September 17th. We got 2 months. The only thing I have to do to get it to delivery against my futures contract is carry it.
Yeah.
Interest, insurance, and storage. That costs $6 a month. And the market's paying me $150 to do that. And that, if you talk to old grain traders, it's the market telling you it's grossly oversupplied, it's begging you, and it's incentivizing you in an insane way to not bring inventory to market. People are trying to buy lumber from me. I'm not even selling it to them. I'm making more money storing it. Like, I'll put a number on it, but it's incredibly high compared to my competitors because there's lumber everywhere. And you talked about my value to the market. The thing I love about commodity trading is my whole sales career, they're taught, don't sell a commodity, make it different. Your widget is better and value add. And I'm actually selling a commodity, and I don't have to wine and dine. I don't have to be super close friends with my customers, and I don't even like most people. So it's just price. So the value I bring is a cheap price times time. What's it cost and how quick can you get it here? And that's it. Because I'm selling the same lumber they could buy from the sawmill. And I get a little excited about this sales model because it's funny to me. I'm actually selling a commodity and I'm bringing more value than I've ever brought to my customers, just from insight and market intelligence. And my customers do a lot of things besides buy lumber. So I kind of keep tabs on it for them. But at the end of the day, I got to bring them the right price. So there's really not a value prop from a widget perspective. Relationships certainly matter. But at the end of the day, if you're around and you've been in business for a few years, it's because you do what you say and you deliver on time, you pay your bills. Like, everyone does that. So the difference between me and the next guy is the price. And I tell my customers that all the time. So when they call me for a price, yeah, I'm not really selling, but I know you can get it anywhere you want at whatever price you want. Because I'm making more money holding it off the market. And as I step back, and I've played this out before, lived it, read about it, done it, you just wait for your competition to kind of blow out their low-priced inventory. And then I'm the only one left with wood. And, excuse me. That's what happened around this time last year. So the other facet of it, and we're getting into the weeds here, trading. So I have to change my sale price with the fluctuation of futures. And not everyone does. They can kind of have a fixed price all week if they want to. But like I said, my break even fluctuates. So as futures go up, I'm always the first guy to raise my price. I have to. Or my competition.
Why is that?
Or other market participants.
Just so I understand.
Because my break even is directly tied to the futures price. As I accumulate futures account losses, I have to bake those in on a net perspective into my
That makes sense.
physical side. So every physical position has a hedge, a literal ticket number where I called my broker and put a hedge on. So as futures move, so does my break even. So when markets initially take off, I usually don't get a bunch of sales because I have to raise my price aggressively as the futures market goes. And the market other market participants could just have lower, they don't have to raise their price. They're just not hedged. So if it goes up, they can keep their price the same and only raise it a little bit. But what eventually happens is they get all the business. I don't. And then they run out of wood. And then they got to reset at the higher price where I'm at. And then we're back on an even playing field. And then futures fall and I'm in the driver's seat again. Or what I have experienced over the last year and a half, futures never fell. And I was able to buy wood. And here's the thing about managing risk. Number one, you can get a bank to lend to you if you manage your risk, but you can put on huge positions. And you're only relatively, I should say, my biggest concern is liquidity. That's it. Margin call, paying my bills, AR, cash cycle stuff. With margin call being my biggest risk, I'm trying to forecast and stress test if futures go. And I have to do this. I went through this with my partner. Okay, futures are at 600. What if they go to 1,000? Any other time in history, they'd be like, that would never happen.
Yeah, now it's possible.
Right now, yeah, not only 1,000, it's like 1,700. So we buy out of the money call options to kind of hedge our liquidity risk. So if it goes to, we pick a number. If it goes to 900, we're not very comfortable here, because if it kept going, we weren't churning inventory. Because again, on the way up, it's hard to sell inventory as quickly as other people because you're raising your price so quickly. And what you don't want to do is make a bad trading decision because of liquidity. So if I have to make margin call and I can't, I either lift my hedge or I blow out inventory below break even just to get cash in the door. And we never want to be in that position. So we're constantly obsessing over what if, where's the breaking point, and let's spend money on call options out of the money to cover off, we just call it liquidity risk. And that's just something I picked up from being in the commodity business for a while. Every blow up from long-term capital management to MF Global, they were all right. They just ran out of cash and time. And it's so that as a basis trader who's hedging everything, I don't mind futures losses. And I'm just a little company, but millions and millions of daily margin calls this year in the month of April into May. We were up $60, which was max extended limits or whatever. Just like on the open, $60. I'm like, oh, $2 million margin call in one day. And if you can't stand in there and make the margin call and have the bank relationships and have the call options bought well ahead of time, then I gotta just lift my hedges.
Yeah.
And then it goes from 1,700 to 600. And that's how a bad trading decision happens, because of liquidity constraints. So I also see it, whether you're hedging or not, I see it at the mill level. I'm guessing they're not built, their financial model and their infrastructure is just not built to store lumber. And everything I've said about my business is about storing lumber where no one else will. It's just risky to hold lumber for 90 days. I wouldn't do it. And I don't trade lumber that I can't hedge. There's species and products and SKUs that have no hedge relationship. So I just don't carry it, because that is risky and stupid. And I don't want to be a back-to-back broker going nuts on the phone every day. That's not fun to me.
Yeah, because you always feel like you got to move it. Right, if it can't be hedged.
Right. And that's a perfectly fine model, but I enjoy fishing. And
it's a shitty way to live.
Not being stressed. That's a great way to learn at a certain age, but that's what the business is, largely, the secondary business in lumber. And I think a lot of commodities, because it's simple and you can hit home runs on accident. You can get taken out, but largely it's pretty safe. You're just back-to-backing stuff.
Yeah, but what kind of spread are you dealing with? If you're selling that quick, it's got to be like super tight.
Oh, it's like 2%.
Yeah.
It's tiny. It's real. And now when the market moves as fast as it did this year, these guys are making double-digit margins.
So it's a vol game.
It's a what?
Like volatility benefits those kind of guys.
Yeah. Well, if volatility, speed is an element of that, yes.
Yeah.
It moves so fast to the upside. Your normal, if you buy it in the morning and sell it in the afternoon, in a normal day, you'll make $10 1,000. Well, in that market, you're going to make 40 or 50.
Yeah.
Because the market was moving every day like that. And then it just became a game of who can source it. There wasn't enough lumber to go around, so everyone allocated to their best customers. So just sourcing lumber was difficult. And a lot of people made a lot of money. And then you talk to flat price traders, back-to-back traders, and it's just a foregone conclusion. It's like, yeah, I need to make as much as I can now because I'm going to give it back, some of it, on the way down. And that's just where their head's at. And I try to lighten up on the way down. But for me, once we got to $900 and $1,000, this was this time last year, September went off at $1,000. That was crazy. No one wanted to own $1,000 lumber. It had never been 600. It had never been 600. And now all of a sudden it's 1,000. Who's going to own that? Well, me. I owned it. I owned a lot of it because I could hedge it. And the $1,000 price didn't scare me at all.
Yeah.
and futures went.
Who is the counterparty on the hedge? That's the thing I don't fully understand. If everybody's like, I don't want to own this, who's the guy that wants to own the counterparty on the hedge?
Well, the hedge is through the CME futures market.
Yeah, I know.
So,
I just don't know who's buying that side of it.
Well, that's a good point. It's someone else.
You're short that side. Who the hell is buying it? It's got to be
Right.
somebody just playing like price speculation, right?
Yeah, that's why we need speculators.
Yeah.
And it could be some hedger that has some forward jobs sold, but that's why the air, and people will buy, market participants who trade lumber like I do, will buy futures thinking there's another $50 in the rally, because that's a hell of a lot easier to click a few buttons than to write a PO and get the logistics and cut a check for a rail car to make the $50 a thousand. So you'll just see folks trying to speculate still is the answer. Yeah, I would argue there's folks who would buy 1,000 because there's a hedge, they're short. They're a lumberyard that sold development at 1,200 and they're buy
they
1,000.
need to go get it.
Right.
Yeah, that makes sense.
Because it could go to 1,700,
Yeah.
which it did for a period of time. So, man, I just went on a whole deal there, but it's just been 2018 was the wildest lumber market up until this one. So I lived 18.
Yeah, I was going to say not more wild than this, I would assume.
Yeah. It went from 300 to 600 and the world was ending. It was crazy. And then it went back down to 300. And it feels very similar. The reason, and Logan talks about this a lot too, 2018, I refinanced my house to fund Deacon Lumber at 5.25% in 2018.
Wow.
I'll never forget that. That's probably why housing slowed down. There's a surplus of homes. Lumber slowed down the second half of 2018. And I didn't care because I feel like, well, I could get money. So they could have charged me 12%. I would have done it. This time's different from the demand side versus 2018. Because you could look at a chart in 2018, it topped in May, got cut in half and just bounced around the bottom the rest of 18 and in the 19. And then we started to climb into 20. Things were looking very, very good in 2020. Solid housing starts, lumber price is a very good, consistent bull trend. COVID, we went back down to 250 and then everything went off and running. The difference to me, we don't have 5.5% interest rates. Demand's there. I'm not afraid to be long. The market's volatile, no doubt. And what we touched on it a minute ago.
But you say you're not afraid to be long, but you also say that there's a surplus of lumber here. So how do you reconcile those two things?
You store it, baby.
Yeah. But if everybody's storing it, it's all latent. You know what I mean? Because the mills are still producing. It's not like the mills shut down.
Yeah. Yeah. So you need outtake.
Yeah.
If you're going to store it, you got to have the cash and you got to have the hedge and you got to have, when I say the cash, like all the things that come with the cash flows in a business, you can't pay your people in lumber. You got to have cash to pay them. You got to pay the bills and the debt and all that. And that largely depends on how you're financed. We don't have any term debt and very, very, very lean from a salary perspective. So we can just carry and not have to make bad trading decisions because we got to meet cash obligations. So that's how I get long. And it's not like I'm not hedging, okay? But just because I'm hedged doesn't mean I'm bearish. I always get a kick out of executives buying puts and it's like publicly available and well, they must not be bullish on their own company if they're buying protection. It's like, well, I don't know, this seems very normal, appropriate to me. So when I say I hedge, like I'm not hedging because I have an outlook. More so, I'm hedging because I have no idea what's going to happen from a quarter to quarter basis. So lumber's piling up. I'm got a big stack myself and I'm just waiting. I'm waiting for the market to come to me. The spread where the September went off at $100 cheaper than in November tells you everything you need to know about how much lumber is in the supply chain. When it costs you $6 a month, $12 to carry it to November 15th, and you can sell a futures contract for $100 to $150 above that, there's a lot of lumber out there. And the futures contract at the end of the life becomes a physically delivered contract. So anyone who's long, mills can sell it, and they'll sell it all the way down to the last day and then deliver against it. Just as another customer, it's all the same. So there's a lot of wood that's got to be cleared. And to me, the other elements that go into building a house, trusses right now, Trusses have been a problem all year, but because we couldn't get a lumber to frame the first floor or to frame 2 floors to get to the roof trusses or the floor trusses in between the first and second floor, it wasn't an issue. But now we got our lumber. So where's our trusses? Well, we can't get the trusses, not because of the lumber that goes in the trusses, but the metal plates that go in the trusses, which is a much more globally impacted material. And we've learned, I tweeted the other day, I had no idea. There's 2 manufacturers of truss plates that own 80% of the market. 2. And these trusses are engineered like your house is drawn up. You got plans. The plates, I think they're called butt plates on the joints, those were spec'd however long ago you got your permit. You can't change those to one of the 20% plate manufacturers because they have them. You just can't, you have to restart your whole process. So it's other parts of the supply chain that I underappreciated because I saw lumber. We talked about home builders missing the brunt of the price rally. They still got $1,000 lumber priced.
Yeah.
And they did fine. And their margins are huge. They're increasing. So I'm like, it's not the $1,000 lumber. The home builder has cash constraints and they can't move on to the next project until they close out the one they're on and get the windows and the cabinets and get that final check. Like there's just a bottleneck. I mean, it gets used a lot, but to me, a lot of it comes down to cash and with labor and all the things that are well covered. But if you can't finish a job, you can't get cash in the door to then roll it over to your next job for materials and overhead and all that. So the cash, to me, it's what separates us and what we do different than most because we just watch that. I mean, everyone watches their cash position, I suppose, but we try to structure ourselves in a way that we're not making business decisions based off of cash flow constraints. So everyone from the mill to the home builder, it's an issue.
I'll tell you the thing that's kind of nuts to me, man. And maybe it's because there's just so much supply that is in the chain. There's guys like you that are holding it. But you're saying I'm sitting on a ton of lumber. Other people are sitting on a ton of lumber. Builders haven't finished their projects. I'm looking at the futures. The November future right now is trading at 634. That's a lot higher than history with a lot of wood in the system. Why is that going on? And then it's not as if it's kind of flat out to March 2022, but you're looking at 665 out to March 2022.
Oh man, you're going to trigger me if you think those back months are forecasting flat price out there.
Well, I guess the question more than, there's no volume in March, right? But January 2022 has some volume, and that's 649. So it's just kind of interesting with all this supply in the system, why are prices not going down according to the futures market?
Yeah. One of my life's missions, I just have to say, is to educate people about spreads. It's less about volume, about what those deferred months are indicating. And it's more about the cost to carry it out to March. And what does that tell you? Or January. So the spot market's less than 630. It's 500-ish.
That's still kind of high relative to history, though, no?
It is. I wanted to get the context in there. And those spot price and that futures price, they don't have to quote unquote make sense until November 15th.
Yeah.
So it can do whatever it wants till it expires. So yeah, the floor is raised. That was been my argument is we're going to be higher for longer. I thought we'd settle up north of 800 to 1,000 and bounce around.
Why was that your thought? Just watching price action and whatnot, or?
Yeah, not anything too sophisticated. I pegged it to home builders did not balk at 600, 700, 800, 900,000.
Yeah.
They did just fine and they were extremely profitable and everyone was happy. It wasn't until we got to that $1,500 price quotes and they started throttling it down, among other factors. So to me, it was a price equilibrium level that I witnessed didn't slow anything down when we were in those price quotes. When the home builders were realizing those input costs at those levels, they didn't blink at all. So now we're at the doldrums because to your point, just logically, you got homes that are not getting built as fast. So the studs in the plate, there's 2 or 3 trickling out, but there's 10 getting produced every day. And there's a massive pile in the middle. So the outtake has to increase, the chew down the pile while the production decreases, and then we get balanced again. And we got a big mountain ahead of us because I certainly didn't anticipate or recognize these other supply constraints within the home building supply chain. And my customers were telling me about trusses and truss plates all year, and price kept going up. And I think it just was a factor of how homes are built, and now there's enough lumber. It's on the forefront. But so to me, the higher for longer thesis largely came from the fact that we are so dependent on building homes from Canadian softwood lumber for all sorts of reasons, not the least of which it's the lightest strength to weight ratio to build a single family home that you can get. You can get stronger wood like Southern Yellow Pine, but it's heavy. You can get stronger wood like Doug fir, and it's like in between a Southern Yellow Pine and a spruce tree from Canada. But that's just how we build homes. It's a great piece of wood. It's easy to work with. It's light. It has a strength rating for a single family home. So we look at the basket in Canada, and it's not growing, if that's a pun. They're not.
I like it. Nicely done.
Yes.
Well, BC is cutting down a lot of output, right?
Yeah, they've reduced the annual allowable cut, AAC. And each province sets their own forestry standards.
BC is British Columbia, for those that don't know.
Right. I honestly can't even name the other ones. I just know BC.
It's fair.
The BC region is the biggest producer of lumber ever. They're the monsters. West Fraser, Canfor, Interfor. And those forests over there have been depleted at a rate the government wasn't comfortable with. And I've said this before, most Canadians that I talk to don't necessarily disagree that they need to slow down to sustain their forest, to have something to log for future generations and all the environmental impacts. I don't think that's up for debate that much up there. So they started reducing this allowable cut in 2015, and it wasn't that big a deal because the housing market wasn't as busy. No one really paid attention.
Becomes an issue now,
but
though,
the Canadians
potentially.
Yes. So the Canadians have been telling us, like, hey, this is common super cycle, and we don't have enough trees, and no one listened to them. And I mean, they were wrong on timing, the folks who were saying it. But now here we are, and people are miserable, and the price of lumber is $500. When I started in the business, you bought below 300 and you sold above 400, and you'd make money. That was the rule of thumb as a trader. And now you're buying 500. The lowest we got for a commodity stick was in the low 400s, and that was not available to the public, was on the futures board. The last few cars, as the mills are just blowing it out for cash cycle reasons or whatever. But to me, it's very significant. And if you look at a chart, the old highs are kind of the new lows. We're bouncing off the old 500s, the old 600s. Really, before 2018, it was 450 to 500 was that zone where you would aggressively sell. But it's not specifically in British Columbia. It's not like your break-evens are still where they were for the past several decades. Their break-evens somewhat volatile because log costs, their dynamic of their input costs, because they got to buy logs from the Canadian government.
Yeah, and it's like backward looking. They got to pay those royalties or a stumpage.
Yeah, it's called stumpage. It's just not dynamic. It's backwards looking. The trees are getting further away. They're just, we call them, this isn't unique to lumber, but high cost producers and low cost producers. And the high cost producers are starting to concentrate in British Columbia. But British Columbia has a better basket of trees, better species mix. You can't cut 18 and 20 foot lengths out of the east. The trees just don't grow in a way. And I'm not a forester, but it's not a thing that you generally buy out of the east, because the trees are bigger, taller, stronger in the west. And not to, I would say not to
like
a material,
redwoods, but different.
Yeah, well,
I mean different,
yeah.
But I'm just mentally thinking.
Yeah, redwoods in California versus whatever trees in Appalachia. They're just different.
Yeah.
And how they grow and the environment they grow in. North America, Canadians have depleted, and they're depleting at a rate they're not comfortable with. So they're just throttling back, and they're not going to change the amount of trees that they're going to allow to be cut each year in British Columbia. And that is the main province that spits out wood to build homes in Florida. You'll see West Fraser. I know West Fraser is Southern Yellow Pine now, but you'll see West Fraser spruce all the way down to Miami, even though there's Southern Yellow Pine mills up the road. They'd rather ship Canadian lumber thousands of miles and frame with that than use pine. So knowing that, seeing the boom, and I like that we've covered a lot of ground because now we're kind of getting to the precipice. The boom, a lot of it was facilitated from mills being so scarred from a recession, housing recession, and China not wanting to believe higher prices are going to stay. So they didn't turn production back on as quickly from their COVID layoffs type deal. And then just underinvestment in capacity because of the China fiasco. They weren't prepared. So we pulled forward a lot of demand. I didn't build a house, but we moved across country last summer. If COVID didn't happen, I don't think we would have made the move. So a lot of those kind of procrastinated decisions were made. And we got the 1.7 million home starts. And from lumber through the supply chain, labor, materials, we can't handle 1.7.
Yeah.
I mean, that seems to be it.
It sounds to me like somewhere around 1.5, 1.6 is about as much as we can possibly handle.
What changes that? I don't know. How do you improve that number, the capacity?
I don't know. My sense, and this is like still trying to piece this all together, but my sense is labor is a big constraint. Logan has said to me, or did say, that he doesn't think builders are going to have a willingness to go much north of that. 1.5 was the number that he never believed, but everybody else said, but now it seems like he thinks is possible for a couple of years. And his reasoning is they got so burned in 2008. So I think the idea that there's going to be spec homes is really low.
For sure.
Or is not probable. If prices are as high as they are, then you would think capitalism would demand some new homes. But then you get into, okay, well, how are we going to produce them? And I don't know that they can get produced. I don't think they probably can. But the demand appears to be there as long as rates are low because affordability is high.
Absolutely. I think immigration helps quickly, us being able to build more homes, but that still doesn't solve the raw material in my lumber thesis.
Yeah, it's not going to get like trusses in your house. That's right. This isn't going to help anything.
Yeah, so I asked how automation is kind of the textbook answer. I think it's true, but that takes a while to develop if it wasn't already there. And so to me, home prices, my friends who bought homes, like, oh, this is the top of the market. You read Allie from Zonda on Twitter, and she talks a lot about how the feedback from just the layperson is like, oh, this is the top of the market. We're all scarred, even though we were kids, from our parents getting crushed on their house.
Yes.
And if I weren't a trader, I would totally understand it. I'm buying the highest price this house has ever done, and it's $40,000 more than it was at the beginning of the year, and it freaks them out. But I tell them, we can't build enough to even come close to oversupplying our home market. It's a problem. It's a chronic problem on the other end of the spectrum of what you're worried about. You just need to get long. You got to get in, and it's hard to make a mistake on real estate if you own it for 30 years. So you'll probably be okay. But when I was putting together my outlook, I looked at the baby boomer. Average age was 29 or 30 in 1989. And we built, on average, for the next 10 years, 1.8 to 1.9 million single-family homes, not multifamily, every year. Almost, 1.8, 1.9 for 10 years. And then we went overboard heading into the mid-2000s. I don't think that's because of what we did in the 90s. So we have a generation that's just as big, that's even a little bit older. The average millennial is now in their 30s. And we're building 1.3 5? Was that the latest?
Yeah, man. This is why Logan thinks the biggest risk is prices explode to the upside.
Yeah. Well, what happens if they explode?
I guess I don't know the answer. You would think in a capitalist society that supply would come onto the market, but that requires the ability to get it done. And I don't know that that's there. I don't know it's not. I don't know it is. That's a question.
Is there any kind of proxy? I was going to ask. You're much more well-read than I am. You have $500 textbooks.
I don't know that matters. I don't know, man. I really don't. I think that's the real question. The question for me, and I guess the thing that makes me nervous is having a little bit of lumber exposure, is what if you can't get the houses done? What if the houses can't actually get built? There's not enough labor out there. And to your point, there's so much lumber supply that mills can come online, and all of a sudden you have a really balanced market, and we're not higher for longer, and we're just kind of middling through again. I think that's how the thesis falls apart.
Yeah. I think mills that we had a lot of mill closures in 2018, 2019 because of low prices. And the narrative was it was a long time coming. Those mills didn't get turned back on in Canada. They focused adding third shifts and running 7 days a week at their low-cost, high-efficient, newer mills. They didn't bring on mothballed mills in the past 18 months in Canada. Is that because of just behavior from being scared to overinvest? And will that all of a sudden reverse if we start seeing $1,000 lumber again? But from what I understand, like when you shut down a mill in rural Mississippi, we can relate. That employs the whole town and they all leave. If you shut down a mill in the bush in BC, your workforce is gone.
Yeah. It's not so easy just to get them back.
Right. So being in the lumber milling business has been bad for however many 10, 12 years now. Like you said, just kind of doldrum along. Buy 300, sell 400. And largely those stocks were just proxies for lumber prices. And they've all diversified into different species of lumber, panels, CLT, the glulam engineered beams, you build skyscrapers, trying to diversify away from commodity lumber. But which to me means just that's like less focus on producing 2x4s.
Yeah.
That build homes out of Canada. So when I hear how higher for longer not work, and we get back into the, again, buy 300 to sell 400 price, dollars per thousand, I just think there's such a strong bid in housing. Literal folks, there's always a bid. For years and years, there's going to be someone to buy your house, which means there's always going to be someone looking to build. So to me, the bid's always there. If I'm thinking about, do I want to be long real estate, own a home, don't want to pay these high prices. If we just hit a capacity constraint where we're stuck at 1.5 to 1.7, to me, if we're able to, I guess the question I need to answer is, are the supply chain issues we're having that I'm blaming for lumber being lower, truss plates, windows, are those chronic or are those COVID Delta type?
Well,
things?
dude, if they're chronic, you could make the argument that there's going to be enough lumber in the supply chain that actually more mills should close, and there's going to be more desire. You're not going to remove the demographic push. That's fixed. We're all the age we are, and we're going to have the kids when we're going to have them. So I would maybe make the argument that, yes, I would grant a bearish thesis. They win the argument that maybe right now is not going to be some sort of like mooning scenario, but the longer you delay it, the more pain is inflicted on mills, the more mills that close down. Eventually, you would think that there is a day of reckoning. Now, that may be incorrect. I think a lot of commodities investors have hoped this for a long time, and they've been really wrong. So why should they be right now?
Yeah, I think that we lived in lumber. We lived that. That's what happened in 2018, 19. Not a lot of people are paying attention to lumber, but a bunch of capacity came offline. I don't have the number. It's easy to look up. It shut down, mothballed, middle of nowhere, Canada. And it was that production capacity was not prepared for 2020, 2021 boom. It just wasn't because of what you just talked about. If you look at a chart, the price of lumber was at $300 for 7, 8, 9 months with a couple of little volatility spikes in there. And it just forced the closure of these mills. And then they got it to a point where it was starting to trend higher. And then you look at a chart and see what happened in 2020. So I think they found it. We're here at 1.5 starts, and the floor in lumber is in the 400s. It's still a commodity. We've broken the Pandora's box of this massive trading range. So people know what's possible, which I think kind of caps the downside and caps the upside a little bit. Because folks who wouldn't buy $800 a year ago are a little more apt to buy it now, because I know it could go to 1,800. And if they buy it at 800, it won't ever get to 1,800 versus staying short. Anyway, just trading dynamics. But I think with the equilibrium for lumber and the amount of lumber coming out of Canada, I don't know how they add more, number one. And to me, if the worst, folks are in a lot of pain right now. There's more money lost when price went from 800 to 400 than went from 1,700 to 800. I have no doubt.
Why?
No doubt. Everyone, me too, piled in at 800. This is the bottom for all the reasons. And so there's just larger inventory positions put on at 800 than there was at.
Now, did you hedge when you were piling in at 800?
I did. The most bullish thing I've done is I hedged with a bunch of put options.
Oh, really?
So I paid a bunch of premium, a bunch. And like I have to be hedged for all sorts of reasons.
But when you say you piled in, I didn't know if you sold, you buy current at 800, you sell 2 months out at 9. What's that look like? What does piling in look like is the real question.
Just a large volume position.
Okay.
It's not that hard to look at the futures market, open interest, and think, wow, but I don't think everyone hedges in lumber.
Yeah.
There's a lot of people who bought at 800 and didn't buy puts or didn't short the market, short futures, didn't hedge, whatever vehicle. So I would be in a much better position if I just would have outright shorted it, but I paid premium and bought a out of the money strike and more kind of traditional hedge, leaving the upside open. So I just know when I have huge hedge gains, a lot of people have huge losses. They're just big positions, and a bunch of lumber came for sale way down, obviously. So they're just the more people holding the bag at 800 than 1,700. And so here we are. This is the most pain the lumber industry's been in a while, 2018.
And prices are still this high?
That's what I'm saying. You step back.
That's nuts.
And futures are rallying today because there's a sawmill caught on fire, the logs outside the mill. So I think we went limit up or something close to it today. The mills are the thing driving the floor is the British Columbia producers. Their break-even price is higher than most in Canada. So when they start to curtail, that's what we call it in our industry, curtail production, reduce capacity, take a shift off, take 2 weeks off, that drives the rest of the market. And so to me, I was wrong when I'm like higher for longer at 1,000. I was wrong when I said, hey, we're normalizing at 900, because we went from inverted spreads, which penalize you for storing wood.
Yeah. So for anyone that's still listening, you're buying at 900 and you're selling it. If you wanted to hedge, you're selling at 850 or something like that.
Right.
Like you're locking in a loss.
Right. And you're defining your loss. I always tell folks, because you could lose more. So it's not like you should buy and not hedge. So then we flipped. So anyway, we're like a train on the track that's first cars stopped and all these cars keep running into it while we wait for home builders to produce. And I meant to look before we came on here, but completions, I think, ticked up, but they're just lagging. Starts are outpacing completions. And we got to get the ability to start to finish a home that's going to be more efficient before we can work work through this.
I'm just thinking about how we're wrong here. And I think the answer is if there's enough people like you that have inventory in the system, is there a way to monitor that amount of inventory in the system? Because that's sort of in a world where that inventory can flood the market and it's not actually mill production that's driving cost and it's the collection of inventory. That's where a problem can start.
Yeah, and it takes a while to clear it.
Yeah.
The difference or the element, if I own it, I don't know who I'm going to sell it to. It's unsold, which is why I hedge it. I don't know what price and who I'm going to sell it to. But my customers, again, they're chronically short. So the lumber that they own is committed to a customer build, and they're just waiting for the will call ticket to be pulled so they can ship it to the job. So,
and they're the one that are setting the futures price. If you're selling the futures price, they're long the futures price. So they're saying to you, I will buy it from you at this price at this date.
Yes.
Yeah.
They're the natural long in the futures market. But so their stacks of wood are all sold. They are. Because again, they can't buy enough inventory to cover all of their sales commitments. There may be 60 to 70% covered, and they make it on 30%, and they rotate it through. In the retail yard of the supply chain, not Home Depot, not Lowe's, your big contractor yards. So it still has the same effect. If they can't move the lumber out to a job site and replenish, then the demand problem. But it's not like these the lumber yards that have a lot of lumber have lost a bunch of money on that lumber. It's sold. The job site's not ready for it. So it just creates like a kind of a train. The front rail car stopped, and producers keep producing and shoving wood in the market. And there's a lot of wood in the chain. You got to reduce the producer side more so. I mean, it's just the math. If the outtake is 2 sticks a day and the production's 3 sticks a day, and you got 10 sticks in the middle, you're taking 2 steps back every day. So you got to get an outtake to 5 sticks a day, production to 2 sticks a day, and then you can finally start chewing through that secondary inventory the guys like me have. But that's just typical lumber stuff. And it'll take, in the fall, there's a good seasonal push, framing, where it gets cold. And then come Q1, I think there'll be a lot of curtailments and production reductions between now and then.
Where, in BC or?
Yeah.
Yeah.
Yeah. And I think by Q1, it'll largely be sorted out. There are so many jobs that look at your house, apartments.
There's nothing to look at, sir. No one's doing anything. But yes, theoretically look at my home. Yes. Thank you for bringing that up.
It's just, there you go. Sorry, your patch of grass.
It's okay.
There's just.
I'm very fortunate to have the problem I have. I'm building my own home. I realize it, but it is a fun joke to make.
Oh man. Well, how are we wrong? And that's, I constantly ask myself that. How could you hedge it? But I think.
Well, the thing about hedging it for you, at least, is you could sell it and then you could stop buying, and then you got to figure out what else you're going to do. But like I said, I'm looking at the futures right now, and January 22, you're looking at 650 per 1,000 board feet or whatever. And last I checked, that's a reasonably good price to sell lumber at.
Oh, it's a great price.
And November, you're looking at 634. And to your point, it's up 6%. So September 17th, I don't recommend anyone in the world goes out and buys equity in a lumber company. It's a terrible fucking idea. Please don't do it. Do your own due diligence. But it's an interesting setup, man. Something I ponder a lot, because I read this guy, Ken Fisher, and you can't really talk about him anymore because he's sort of he tells sexual jokes at conferences, and he's not the most, how would I say, he's a little socially awkward. So whatever joke he tried to tell got him real close to canceled, if not canceled. But he likes to refer to the market as the great humiliator. And one of the ways I think that the market could humiliate everyone is to go on some sort of commodity real bull cycle. And maybe it's who I roll with, maybe it's the people that I see all the time or whatever, maybe it's the social circle that I've chosen to be involved with. but no one is trying to hear commodity theses. Like, they just don't care. And here you're telling me about there's a ton of wood in the channel, and even despite that, futures are $250 higher than they were 3 years ago. That's interesting to me at a minimum. And I don't know, I hate the idea of being long a mill or mill production. It scares the shit out of me. But then there's the other side of me that looks at the numbers and the facts, and I'm like, I don't know, this may work. And the odds offered matters.
I think we're living I think the worst is behind us from just a flat price perspective. Doesn't mean we won't kind of be in this channel for a bit.
I hope we are, man. I got to build a house. I got to pay real dollars on real wood. I'm not trying to have this shit moon.
I have a hard time to the upside picking a number, but I think to the downside, it's a very clear floor has been set, especially being on the inside and knowing what those numbers were and the cash market and what it took to move it.
500 in the cash market? What do you think?
Say that again?
Like, what do you think the cash market floor is, roughly?
400.
400?
At the extreme, and we touched it. You didn't see it on the screen, but there were cars moved there, and I just think that was the worst of it, because it felt like 2015 when the market fell because of China. It felt like 2018 when the market bottomed because of interest rates, and it felt like March 2020 when the market bottomed because of COVID.
Wow, it felt that bad?
It fell in March of 2020.
No, I'm saying recently felt that bad at 400?
Oh.
Or was that March of 2020?
No. I'm saying the 400, because we fell 70%, the psyche of the industry.
Yeah.
Right? And you just got to wait and got to let the lumber clear and get rid of your piles, and producers got to slow down a little bit. And they have. I mean, they've announced curtailments. They've announced shift 3 days a week, 2 shifts to slow down their output. But the vibe as a trader in the field, it feels like the bottoms we had in 15, 18, and March 2020, where it got real desperate. And those numbers where we cleared at were in the mid to low 200s and those other dips. And that's my larger point. The same vibe and desperation and capitulation from a pricing perspective bottomed at 400.
Interesting.
And you're making the point on a chart, on a futures chart. Cash again is a little bit lower, but I think the worst is behind us from a flat price perspective. I think the mills are out of their heads out of the clouds. I'll never forget. I went on TV. I'll never forget.
That was back when you were popular. Now you're doing second grade podcasts.
I know. Now I got to tweet about labor and paying people to get attention.
That's right. How's that feel, man? Do you feel like a little bit like a shunned girlfriend? You got somebody paid attention to you for a little while. And now you got to go out and get attention elsewhere.
No one in my personal life has Twitter, cares about it. And so I feel a little bit like I live a double life on there, where I'm very popular and get attention.
How's Twitter been for you?
Pretty easy.
Do you think it's been a benefit to your life?
It has. There's a large story behind Twitter I can't really talk about.
Okay. Well, thanks for the lead.
But it changed my life. Yeah, changed my life. So it's been great.
Dude, I love Twitter.
I've met, because I followed you for a while, and I watched, what's the After Hours?
Oh, Value After Hours?
Yeah. That's right.
Saw
you for the first time.
I didn't know that you listen to Value After Hours. That's cool.
One of the episodes, you guys were, hey, we're getting on aftermarket or whatever. And one of the guys on there was an electric grid
Jake
engineer.
Yeah.
And Texas was going through their thing. And I want to trade electricity. Before my career is over, I wanted to trade electricity. From what I understand, it's very similar to lumber.
Oh, yeah. You got to talk to Jake. Jake will help you out.
There's a futures contract that is, or some kind of hedge tool that's misunderstood and inappropriately used. That's right up my alley. Anyway, so yeah, Twitter, that's where I saw you. And I don't take myself real seriously. I don't take anything very seriously except my futures contract. I get real upset when people talk down to my lumber futures contract. I get upset.
Yeah, well, that's how you make your money. I get it.
Yeah.
That's how I feel.
Yeah. And I get upset.
I've been pissed off lately, man. People are shitting all over my portfolio. And by people, I mean the market. And I don't appreciate that.
They like to pull up old tweets of yours and throw them back at
man.
you.
I had a nice run there for a minute and I was feeling myself. And now the market has served me up a nice slice of humble pie as I've gotten involved in things like lumber. But it's not actually the lumber issue that's causing problems. It's some of the things that have worked in the past and some. You know, the problem with me, man, is I like cash flow and I like it cheap. And turns out it's not very desired in either today's market or I don't know enough to justify. Maybe said differently, maybe when I think cash flow is cheap, the market's smarter than I am. And I've gotten addicted to some of these cheaper cash flow ideas and it's really fucked me lately.
Let me, as I don't know anything.
I mean, if you listen to Value After Hours, you know I like QVC.
Right.
Yeah. Just treat me like a bastard for liking that. The market is.
Well, I haven't tracked it.
It's been terrible. Terrible.
Yeah, I believe you. So I'm asking as someone who I just trade lumber, but when you say cash flow, you're saying at the end of every quarter, they're spitting off cash that they can lever up or pay shareholders with. Is that a simple way to summarize that?
As I get red wine all over my lips. Yeah, so I hate to reduce what's going on in the portfolio to a factor, but I also can't help but watch how certain things are trading together. And there are a couple businesses that rhyme that are like the second or third player in an industry. QVC, you could argue, is sort of its own animal, or maybe the fourth or fifth player in an industry. I'm not going to quibble with that. Maybe have leverage on them. It's just stuff that you really have to, and to be quite honest, I think you have to not have a whole lot of career risk in order to bet on it. And I think that with all of the hope and optimism of companies that are coming to market for the future, the incentive, if you are an analyst, PM, whatever, at an institution that runs money, to go out and bet your reputation on one of these companies that's sort of off the radar and or a fourth or fifth player makes no fucking sense. And by the way, a ton of ETFs have momentum as a factor. And on a market cap weighted world, as things get less valuable, they get less valuable, to be Yogi Berra. But it's also true. And I just think that there's some things that are really thrown out with the bathwater. So I talk about it all the time. I love it. It might as well be my only position. But QVC, I mean, that business, I fundamentally think to common equity, because they've got a ton of debt and then they've got a preferred share and then they've got the common equity. I fundamentally think 500 million to 750 million is underwritable of cash flow, is underwritable for the next 5 to 7 years minimum. That business is trading today at $3.5 billion. It's basically trading as if it's in liquidation, and the customer dynamics are the best they've ever been. And the average customer is 60. The super fans,
really? I guess that makes sense.
60-year-old woman. And the super fans, they order, I don't know what the fucking number is, call it 35 times a year, and they spend, I don't know, $50 per order or something like that. I mean, you're going to tell me that business just goes away in 5 years? I just don't buy it. And then on top of that, you've got a guy at the capital allocation helm that can spit you back cash or buy shares. He's very intelligent. He's not somebody that is just running a company for salary. And I just don't think you can pitch anybody that company right now. If I had if I gave two fucks about my career, why in the world would I talk about QVC in a world where I can go talk about all of the great things of Etsy, I can go talk about all the great things of Zoom, you got Peloton, you've got Google, Microsoft, all this stuff. End of the day, I think you come out of the gate with a 15% free cash flow to common equity multiple, and I think that's how you get paid. But I might be an idiot, but it's what I believe. So if I don't believe on, like if I don't bet on what I believe, how am I going to look myself in the mirror when I die? And we'll see. I look forward to seeing. I suspect that when I'm 50, maybe I'll look back at myself and be like, how are you such an idiot? Or thank God you were smart. But I don't think the answer is going to be, oh, that was a moderately fine bet. I think the outcomes are going to be, the dispersion is wide. Same with this lumber idea.
Yeah. Yeah. I think that's the way you're bent that way.
I can't shake it, dude. Like it's in me.
Yeah. And here's the thing.
It's why Mike and I get along.
As a risk taker, yeah, I've heard him talk, I think on your podcast, I think he was talking about Zales or something, and just like a small dipping his toe in the water position for him is 15%.
Yeah, he's out of his mind. I love you, Mike, but you crazy.
Yeah. I'm going to take this a little bit of a different path, but I'm passionate about it. The ability for me, and I don't know you personally, but to do those kinds of things is because I have just a tremendous wife and family and super stable home life with my kids that are well adjusted and don't have a chronic illness and don't have a disability and don't have trouble at school, and a wife who's super supportive and understands the risk and the volatility and the mood swings, who, when we started Deacon Lumber, we went out, it's like, if we lose it all, and more than that, because when you're levered, you can lose more than all. You can start losing other people's money. And we go bankrupt and the whole thing, we're still going to be in love, and the kids won't know the difference, and we won't raise our lifestyle to have a big jolt if something like that happens. And like that, to me, is what empowers me to sleep at night, to risk a bunch of money, because it's just money. And without that support system, and you're talking about, it's in you, and you're risk taking, and you're chasing those wide dispersion plays. For me, it's the ultimate stability as I assess risk is my family and my wife. And like the fact that we're super set and solid, and we've been through a lot together, been married 13 years, and it just gives you the confidence to go take and put yourself out there professionally, because personally, super stable and loved and content and safe. And for me, as a trader, business owner, risk taker, it just makes me better at all those things, because it's the most stable thing you can have in a world where we live a very, very volatile professional life. I couldn't imagine living volatile personal and professional.
Dude, preach.
It's not sustainable.
So preach. That's how I feel too, man. That's the partner that you have, in my view, is as important as the strategy, if not, well, more important than the strategy that you implement. Because I agree with you. I know that my kids are happy kids. I know that my wife is dope, and she's got my back and I got hers, and she's more comfortable. If I lost everything, she's more okay with that than I am. That's my biggest fear, is I don't know who I'd be if I lost everything, because I was born into a fair amount, and it's the thing that I run from the most. And the weird dichotomy in my life is I play this game that is high risk, but I'm also really afraid of who I'd be without anything. But at the end of the day, if I didn't have anything, I'd still have my wife. And that is incredibly, it's an insane backdrop. It's the biggest, I'm long a huge put option, for lack of a better term, right? Because she's stuck with me and I know that we'll get back together, or life back together.
Yeah, same. Yeah, same. That lesson, it's one of those, I don't want to learn that the hard way. And just super special relationship with Stephanie. And like you said, it's the backdrop and it's the security net. And I view making money and trading and all those things more competitively than from a competitive lens and a scorecard. Not that I advertise necessarily, but it's just fun to win, compete, move on to the next challenge. Than anything else, it frees me up to take a lot of risks that I think a lot of others wouldn't. But you said your partner gets just such a huge advantage. And I feel weird saying like my wife's an advantage in the marketplace. But enough people have said over and over and over, when you get to the end of your life, you didn't wish you saved more, spent more, made more money, or spent more time at the office. Like enough people have said that. We've tried to structure our lives because I don't want to grow. I don't want to become a nationwide distributor with locations all over the country and own the real estate and negotiate with the rail lines on freight rates and hire and staff and org. I don't want that at all, because largely I'll spend my 30s and 40s building that out. And
imagine all the shit you'll miss.
For what? Yeah, I just, and living a life on a keyboard is extremely fortunate from just a workload and availability perspective. But it's, I don't know, it's just Stephanie, I'm sending her to California. I did a lot of travel this summer unexpectedly, and she had the brunt of our 4 kids, and I'm sending her to California.
You got 4 kids? How old?
Yeah, 8, 6, 4, and 3. Oh,
you're a maniac, dude. I got 7, 5, and 3. Or 7, 5, and 4. Sorry, Warren. I forgot.
yeah, we're right there. It's really funny. So I got the kids all next week. She really had them all summer, but it was a life-changing and fun experience professionally for me this summer. And every week I was like, I think I'm gonna have to hit the road again. I gotta go here, I gotta go there. And it's not like we went into the summer knowing I'm gonna have a busy summer. All this just kind of piled and grew in the stakes and the time commitment. And she just was, I don't know if I put this on Twitter. I definitely put it on my Instagram. So Stephanie and I have been going to marriage counseling for 4 years. And it was less, I got to fight the urge again to be like, it was an investment in my business to have a happy marriage. But like, that's the byproduct of it. And my business has benefited from the strength that we have. So we started going 16, 17, and no, it was 17 into 18, because I was starting spinning off Deacon Lumber. And she was struggling with postpartum depression.
Oh, fuck, dude. That's a lot.
And so she was going, and then I would come in. Yeah, it was our 4th kid. And each kid, I had moved jobs, like every kid, I'd done some change in my life, career or house. Anyway, put her through a lot. And I was posting about this journey on Instagram the other day. I viewed therapy eventually, and I wasn't against it. It wasn't something I was scared of. But she's been working with a counselor, and then they bring me in and we start working. And what I realized was we were having typical midlife young kid marriage problems, which generations before just powered through.
And then resented each other, by the way. But yes.
Yeah, we can see it around us. And I'm lucky enough to have older brothers who I look up to who have encouraged me to go to counseling for a while, because we all have the same baby boomer parents, so can benefit. But so anyway, I go in there with Steph, and it became a place where she could tell me things, because I am so intense and so competitive that I'm hard to argue with. And so she could be in a place with like a moderator and like tell me things that I wouldn't want to listen to, or I could write off. And we were able to get places in our marriage that we hadn't been before. And as we're learning to be parents, I tell my oldest daughter, she teaches me, she taught me how to be a dad. And having kids and then running a business and then having a risk on that moves lightning fast, it's a lot, and it affects everyone in the family. And so we've been going for 4 years, and I go individually, she goes individually, we go together. And now I view it as a mechanic. I remember thinking, this therapist of ours, we're not unique to her at all. She sees people like us all the time. And just like a car mechanic sees the same problems, they just kind of drive it around the block, listen to a few things, like, oh yeah, this is probably the issue.
Yeah. But in your own life, it's like, no, this is super unique.
Yeah. I became less special all of a sudden. But
I understand.
To me, I appreciated her talent for keeping it fresh, because she didn't seem bored. But I'm like, you've done this before. Like, you've talked to people who the husband works late and then doesn't help with the kids at night, and the wife doesn't speak up. This is a normal problem.
I'm going through that today. My wife was like, I'm so tired. I'm up every day. And I'm like, I have been up at 4 or 4:30 every single day this week. But it's hard to consider what each other is going through in that time, and to remember that each has struggles and sacrifices through whatever's going on.
And I found counseling is where I was able to listen, I should say. And there's someone, a therapist there to kind of keep me in check from kind of steamrolling her in conversations or arguments. So all of that to say, we go see our therapist to check in, just like you go see your mechanic with your car, change the oil. Hey, this is creeping up, and talk through things. And now we're able to recognize behaviors and patterns and be able to reach each other in a way that has allowed me I own several businesses. I run a volatile lumber trading firm. And all the while, I know my wife and I are going to be okay and love each other at the end of the day. And I just think that's just such a huge advantage to then go put on risk and get mad at myself for winning or losing, and double down and think of something creative and get after it, go after it. If I just lose money, this is not that big a deal. It's not a big deterrent to me. And my wife and our journey, right in the middle of starting the trading firm, that has just brought us to a point where I really feel just so secure in my life that I can just go pile tons of risk in my professional life.
That's cool. I hope you don't pile too much risk, but that's awesome. And
we did talk about advance rates, and they're pretty aggressive.
Well, man, I appreciate you coming on. I appreciate you sharing what you just did. And I've had a really good time talking to you. I hope that we continue to talk in the future. You're a very cool individual, and I think that you've picked a very cool profession. So thank you very much.
Thank you. Appreciate it.